Welcome back. This is Jacob Milligan, owner of 9M Investments, and today we're going to walk through May's income update. So the month of May, obviously the equity markets really rebounded hard. S&P, Nasdaq up, big numbers, Nasdaq up over 10%. A lot of times when there's big market moves like that, that can affect your traditional fixed income portfolio. So that could mean that pricing within your bond portfolio went down. Depending on the structure of how you hold your fixed income, even yield could be affected negatively. So within our portfolios, when there's big market moves like that, to the upside, to the downside, really doesn't change what we're able to do from an income generation. So for the month of May, we were up 14.17%, bringing year-to-date average up to 14.21. So how did we do that? The first leg of the sleeve of the portfolio is private real estate. Within that, we hold Blackstone's BREIT, one of the biggest funds out there, Nuveen's Global City REIT, again, another sizable multi-billion-dollar fund. In what they hold, industrials, logistics, multifamily housing, data centers, infrastructure, Global City, obviously with the name, they have exposures around the world. Why I like them, predictable cash flows, north of 4%. Depending on where you hold these assets, there's a return of capital correlation, or not correlation, but a component to this that can have favorable tax conditions and taxable accounts. And then obviously there's an opportunity for long-term growth here. Since inception, B REIT's up over 9%, Global City REIT's up over 7%. I'm not necessarily looking for that, that steady income is why I own these. The volatility being low is why we own these. But there is an element to that, and that goes through cycles. That could be slower or longer depending on what's happening in the world. Other part of the sleeve, private credit, current holdings, BCRED from Blackstone, Blue Owl's private credit, and Carlyle's tactical private credit fund have been in the portfolio for a while. But we have some new additions that we've allocated to here. More again, looking at this from a diversity play, we want to kind of spread not under what we're investing in, but the types of investment even within these loan portfolios. So kind of newest players, fund from Calamos. They are able to partner with all the deal flow kind of coming through. So they have 91 sourcing partners. They're spread across 45 industries. And within this portfolio, they have over 180 loans. So a good diversity built in with that. And they can choose by deal what they wanted to be involved or not. And so that gives them some leverage to make sure that they really kind of control that portfolio going forward at any moment. Next two funds from Neuberger Berman and then from Blue Owl. Both of these are focused on actual hard assets. So a couple of different things within here, interesting litigation, finance, art finance, small SBA loans finance, even consumer loans. Blue Owl's more focused on kind of infrastructure, but they have a good mix of different types of credit out there as well. So again, adding these to add a little bit more diversity. BCRED and Blue Owl is typically direct lending type of investments. CTAC's a little bit more diversified within that. There's several different pillars within that fund, but this gives the overall private credit sleeve a much broader diversification. And then going to the ETFs, for me, a lot of this is based on liquidity. I don't have a huge portion within the portfolio within these ETFs. CAIE, CAIQ offers some opportunities in taxable accounts, again, a return of capital factor, where we can be tax aware, and that makes sense. We do that within these ETF structures. And then finally, structured income notes. In May, pretty active month. We had 6 notes called. We actually added 12 new structured income notes to the portfolio. Had some new capital come in, so we're a little bit busier than normal on that side. New notes, again, offer yields from low teens to high teens. Kind of a varied range depending on kind of what structure that was available. But again, we very diversified across issuers, maturities, underlying exposure. So again, and from a size factor as well is an important part of that as well. So again, that's how we come to our 14.17. If you have any questions, please do reach out. I hope you have a great day.